Good morning, futures traders. Today is Tuesday, April 15th. Happy tax day. The time is 9:29. We're going to be trading the NQ today on the 1-minute chart using the new Quant Alpha trading system. So Quant Alpha is one of the new partnerships that wants us to share their manual trading strategy. It is not an automated trading strategy. It is a manual trading strategy, although I believe they do have a bot. So I'm going to be testing the Quant Alpha for NQ. So the whole thought process behind the strategy is slow and steady to pass a $250,000 account. So they give you a trade plan for doing a 250K Apex account or whatever, whichever company you choose. So right now the market's open, and I'll kind of share with you some of the trading rules. So what I have on the chart is 100 EMA, that's the white. I have the VWAP, which is this green-red line. I have an 8 EMA, and I have a parabolic SAR in the pivots. What you're going to see Quant Alpha generate will be these shorts, which is called a Quant short or a Quant long, green. And then these arrows, these red arrows or these green arrows, which are high volume bars. Okay. I also have support resistance on here as well. So you can see I have the pivot points and then the prior day and current day open, high, low, and close. So those are all the indicators you need for this. And as you can see, it's really not a crowded chart. So we'll wait for the first the first rule, but let me share with you the first order type, which is called an S1. An S1 trade is when you get one of these quant shorts or quant longs. So you'll hear the software announce that you're having a quant short. And what is considered a valid trade? Well, if it's a quant short, it must be below the 100 EMA. Okay. The VWAP is optional, but quant short must be below the 100 EMA, which in this case it would be. If it is, you want to make sure you have 80 ticks or more between the break of the bar and the next area of support or resistance. Okay, in this case, we would have had 155. If you do, then you take the short at the bar close at the break of this bar. So you would place your order your sell order right here, and then you let it do its thing via the ATM. Now, if you lose the trade, you're done for the day. If you are in a green position, you're done for the day, regardless of how much it is. That's part of the rule. Okay, so we'll wait for our first trade to hit. This is Bailey's resistance here. Wait for the signal here. So that's the S1 trade. An S2 trade is the second type of trade where the S1 is not valid. So in this case, we had a green here, a quant long. The quant long must be above the 100 EMA. Okay. If it is not, then what you do is you wait until you get this green arrow, which is a high volume bar, and that closes above the 100 EMA, then you can take the long. Okay, so S2 again would be you get the quant long, which we did here, but it must be above the 100 EMA, and you wait for this high volume area arrow to appear, and it must close above the 100 EMA. And then the third component to that is it must have at least 80 ticks to the next area of resistance or support. So that's an S2 trade. An S3 trade is a breakout trade. And an S3 trade is you wait for a high volume arrow, which we see here, okay, to occur, and then break out through these zones. So this red area here is a zone, and this zone moves. And this green area here is a zone. And as the market stays within these areas, you'll see these zones move. Basically, they're breakout areas. Okay, so in this case, we would have had an S3, but again, the market just opened, so we're waiting because there's a lot of wild swings at the open, so we're just going to wait. But you notice that earlier, this zone here was down here, right? And that would have been a valid S3 trade if the zone was still here and then we broke out. Okay, you'll see that trade a lot more often in the morning than you would during the day. But those are the three types of trades that we would wait for. So right now we'll just wait. I'll put it on pause until we get into a trade. But that's the Quant Alpha system in a nutshell. So we'll wait to take a trade, and then I'll review that one more time. Okay, we're in this S3 trade here. So we're going to see if we can hit our break even here. We hit our break even automatic trail. So let's see if we can get our first target hit. Trying. He wants to hit it. Come on.
Target filled.
Target filled. I just moved the stop target below that resistance area here. So it should start to trail once it hits some more profit. Unless it gets pulled back to break even. Okay, so we hit the break even, so we're up $365. So basically, you'd be done for the day according to the plan. So let's go through the different types of orders again. There's an S1, which are these quant longs and quant shorts. Again, the rule for that is if you have, let's say, a quant long, you wait for the close, and the close must be above the 100 EMA. If it's above the 100 EMA, then you take the trade at the high of that long bar. If it's short, it must be below the 100 EMA. And if it is, then you take the trade here at the break of the low of that bar. And then you place your stop either what the ATM gives you or high of this bar, the bar you entered on, or depending on what's closer, it could be the second parabolic SAR dot here. Or, again, there's multiple areas here, sorry, wrong thing. Or you take it at the swing high in this case. So whichever's closer. Two is if you have a failed S1, which in this case, this would have been a failed long because it was below the 100 EMA. You wait for this high volume bar to appear, And if it does and it closes above, then you take the trade at the break of that bar. And the same rules apply. Stop is either at the end, the bottom of that bar, the second parabolic SAR dot that shows, or the swing low. And then the S3 is a breakout trade. So you wait for it to break out of these areas here. In this case, the zone was here earlier. We had the green arrow. So you take the trade above the area. Again, these zones move. So anyway, that's the Quant Alpha system. Like I said, the ATM that it uses is pretty good. You start with a two target ATM with two contracts on a $250,000 account. You start with 100 stop loss. Target one is 80, and then your second target is 400 because it goes for the big gains. Your first stop strategy goes to break even at 70 ticks plus one, as you saw. The second target starts your trail. So it keeps your stop losses around 80. And then when it hits 80 ticks, it continues to just trail all the way up for step one. 100 ticks goes by 4, and so on. So it's a pretty cool ATM that you use as well for this. So with that, I will stop for the day, $365. Again, the rule is if you're green, you stop. If you're red, you stop, regardless. If you're up $5,000, you stop. If you're up $10, you stop. That's the rule. And then you come back and do the same thing tomorrow. Anyway, I'll continue trading it and testing it out to see if we get ourselves funded, or just to see if there's a good likelihood that the system can help you get funded. It will take a while to get a $250,000 account. You can also do a $50,000 account using either 4 micros rather, or 6 micros. Your choice, depending on what your risk tolerance is. So I can show you what that looks like as well on the micro account, and maybe I'll do that sometime this week. Anyway, have a great rest of the day, and we will talk to you tomorrow.